Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had moderately a flat day in the markets. We had some choppiness up and down, not a lot of volatility, but the semiconductors with the SMH really led the way, pushing up over 1% today. There weren't too many big movers, but we're going to look at some of the smaller caps like QS, and we're going to get into some education on that, understanding the flow and how breakouts work. I look forward to showing that to you. But first up, let's go to the market overview page. And we see here the Dow Jones down 0.08%, Nasdaq basically flat, down 0.04%, S&P 500 in essence flat too, up 0.15%. US oil now up 0.61%, and gold is down 1%. Bitcoin is staying moderately flat, up 0.47%. So jumping into the S&P 500 heat map, we see here with a mixed day, basically flat day. We've got some greens, we've got some reds, but nothing's really pushing in the bigger stocks tremendously today. Amazon down 1.84%, Google down 1.51%, AVGO down 0.8%. NVIDIA up 1%. That's balancing everything out in the S&P 500. Tesla even staged a nice recovery from yesterday's plunge, now up 1.28% on the day. So into the SPX, and we've been talking about this for quite some time. We're extended on this chart, overbought, no doubt about it. And we're getting into several different combining areas of resistance, all calculated with these three trend lines that you see here, these three yellow trend lines inclining. And price action is having, at least for now, difficulty pushing higher, getting through this area. To back that up, we also have another inclining resistance area mapped out by this blue parallel channel. So right in this area, this is a lot of resistance for us to get through. I'll be very surprised if we continue pushing higher this week because of all of this resistance. What's likely to happen is some sort of pullback, or at very best, if you're a bull in the market, some consolidation here before going higher. Pullback to support is just under 6,000 here at 59.42 on the chart of the SPX. Next up, we've got the Qs. Very similar situation. We're starting to run into a lot of resistance here on the longer term chart of the Qs. You can see here we had price move up on Thursday of last week. And then the last two trading days, we've come down and chopped sideways. We haven't yet chopped sideways enough to create a bear flag pattern, although this is a very small bear flag pattern. So I really wouldn't be writing this down. Look how very similar the price action was on the previous 3 days of trading. We had a move up, one gap down, sideways trading, and then we just moved higher. So I would rather see a bigger candle right here and more consolidation to fully call this a bear flag pattern. We'll be watching the developments over the next couple of days. Into the SMH. The SMH, as we see here, we are really running out of time. This has been amazing how prices followed this inclining trend line for the past month and a half, 2 months. Really incredible price action, but then now it's coming to a head right here. We've got major resistance from this longer term trend line right here, strung out from the pivot high in August, all the way out, connecting all these other pivots to where we are right now. And notice this wedge pattern that's been forming here on the chart of SMH. It really runs out in the next couple of days. By Friday, we should know whether or not we're going to be trading above or below this wedge pattern. So we're really running it out of days. We'll see, though, because the buy the dippers are coming in. Every little dip in any semiconductors is getting bought up and being pushed higher. So we'll see if that does change by the end of this week. Into IWM. IWM continues its move up. As we see here, very nice vertical move here on the chart of IWM with the small cap stocks, really playing catch up to the other big indices that we've already covered. So we see here we're now into resistance on the IWM. Notice here, if we go across the screen, we're right into the bottom area of these pivots as well. So this does make sense, especially after an extended move that we see here on the charts. We'll see what happens as far as consolidation, because we still have a lot more room to run with small caps. A lot of small cap stocks have their values way down at the low of the charts. A lot of those small caps have some room to run. We'll see if that can develop over the next week. Maybe we have continued more money rotation from semiconductors into these small cap plays, because the small caps do have, as I said, hundreds of percents to run to catch up to get anywhere near where we're at on the charts of some of these other mega caps. So first area of support, though, if we do have a pullback down at 211.15, but I'm going to be watching to see if we consolidate along this trend line and bust through to go to 230 first before having any sort of significant pullback. Next up, we've got Bitcoin. Bitcoin, as we see here, is forming beautiful bullish consolidation over the last 7 trading days. Just move up and then sideways chop price action. What this has done is created an inverse head and shoulders pattern here on the chart of Bitcoin. We'll see if Bitcoin can push above this trend line. If it does, Bitcoin actually can move higher than this parallel that we see right at 118,000. The measured move for this pattern here on the chart is going to be right around 122 to $121,000 on the chart for Bitcoin. We'll see if it can gain strength and momentum and break through this trend line, because this pattern has not yet triggered. Bull flags can fail. We're going to show you what happens with failed moves later when we look at Soundhound. Next up, we've got gold. Gold we have here pulling slightly down on the day, but mainly this is all just sideways chop for the last 4 trading days. You can see a little bull flag pattern is starting to form here. If we have continued selling pressure tomorrow, this bull flag pattern will be negated, and then price action will likely come down, catch support on this inclining trend line, roughly around 3,200 on the charts. Next up, we've got silver. Silver continues to demonstrate strength here on the chart. Even if we flip over to the weekly time frame, you see here, this is much cleaner bullish consolidation on the weekly time frame, all lining up for a move up here to this measured move at $38.97. Any pullbacks in silver, I'll be a happy buyer for that continued move up near the $40 price range. Next up, we've got U.S. oil. U.S. oil did push higher today. Very nice push on U.S. oil. However, this is still all inside bar bearish consolidation for this big move down. The area of resistance that still will maintain this bearish consolidation would be up here at $70. So watch to see if U.S. oil tags 70. That should be good resistance for a pullback down, and see if we can break down through this pattern, which will put us lower on the charts of U.S. oil. Next up, we've got nat gas. Nat gas, as we see here, is starting to slow down with its selling pressure. You can tell that with all this price consolidation and price closing all within this one candle. You know, this one candle moving down plus this have contained all the closes over the past 5 trading days. So with that being said, this is a bear flag pattern insinuating more downside pressure here on nat gas. First area of support at $3.13. And then for the move up and still maintaining a bear flag pattern, this trend line will form and pose as resistance right at $3.56. So as long as price stays right here in this area, the likelihood for nat gas to go lower increases. Next up, copper. Now, copper exploded today. This is the daily chart that you see here, right above this daily topping tail right here that occurred back in March 26. Now, the reason copper went up is because Trump floated the idea of tariffs, a 50% tariff on all copper inputs. Now, most copper is imported to the United States from Chile, Peru, Canada, and Mexico. However, China is also a player in that, as they're one of the largest copper refiners in the entire world. So this is going to affect a number of different countries should this come out to be true, and should this 50% tariff stick. The day of implementation for this tariff will be November. So we still have several months out for that to be sorted. However, November will be the target date for those 50% tariffs to take effect. So let's look at the copper chart and see what's happening with it. So on the daily chart, we have a move up into very near this inclining trend line. And this doesn't really give us a good gauge as to why price stopped today. But if I flip over to the weekly chart, look at this trend line analysis. I'll connect pivot high over to the very next pivot, as you see right here. And you can notice that that trend line today was pierced, and then selling pressure took over and pushed the price back down on copper. Now notice here on the weekly time frame, we have a weekly topping tail and we have a daily topping tail, much like what we've had on gold. Both of those are very bearish signals on the chart. I'm very interested to see, since this tariff idea and this tariff imposition on copper won't take effect till November. Was this just an emotional buy right now? Because still negotiations can happen. We'll see at the end of the week. The end of the week is the most important for seeing if this weekly topping tail is taken out. If it is, then we will likely be headed higher on copper. Next stop for copper is not far away at this inclining trend line. Roughly, it's going to be right around the $6 point in the future weeks trading on this chart. Next up, we've got Intel. Intel has had a beautiful run and breakout over the past week to 2 weeks of trading on the chart. You see here on the daily chart, we've got an inverse head and shoulders pattern displayed with this diagonal blue line, the neckline of that inverse head and shoulders pattern. Now, today we did tag resistance at $23.77, and notice price retreated ever so slightly to close the day here at $23.59. So in the near term, price is chopping around in this inclining parallel defined by these inclining yellow trend lines. Support would be at the bottom area of this inclining trend line. But with this pattern intact and now triggered, the likelihood Intel will continue to push higher to 28.48 is higher than going down. So any pullbacks are buying opportunities for this completed measured move target of 28.48. Now, keep in mind, Intel is a slower moving stock. It really, if you scroll back out on the chart, you can see here, we're way down near the bottoms of this chart. And it's really had a difficult time to fight to get back up to gap fill on this chart, which is right here, is very close to this measured move. So all this pattern is telling me Intel is likely going to get out of its rut down here at the bottom of the charts in the near to midterm. Next up, we've got Affirm. Look at this chart and look at the massive red candle on the daily chart of Affirm today. Almost a complete engulfing reversal candle. But needless to say, it is a reversal candle from price action yesterday. And also, if I scroll back on the chart, this does make sense. We've got right up here at the top, we've got a long-term trend line originating back here in 2021 that connected over to the most recent high pivot. And that's where price is halting at the moment, at least. So in Affirm, great move on it, moving up like this. But like many stocks, they've moved up too quick, too fast, and need to have some sort of pullback before they can continue moving higher. Clearly defined right here, resistance with this trend line right here at $71.48. The area of support will be this inclining trend line for a buy to reattack this trend line. Currently, it's right around $62.53 for a nice area of support for another attempted attack and breakout on this declining trend on the chart of Affirm. Next up, we've got GEV. Now, GEV ended up the day basically flat, down 28 cents. But earlier in the day, look at the massive selling pressure that hit GEV when it did tag this inclining trend line right here. There was a lot of investors taking profits because if you look at GEV on the daily chart, mammoth move. We're talking about a move from 251 now all the way up to 530, 109% move. And the reason GEV is moving is because of all the build out of these brand new data centers that are set to be opened within the next 5 years. So a lot of companies building those data centers are reaching out to GEV, setting up contracts for their products. So in the most immediate near term, GEV is overdone to the upside, needs to come back, needs to pull back in so that it can create a solid base for a continued move up higher. First area of support to do that is 466.62. A more conservative area, which I really don't think is going to be tagged anytime soon, is going to be down here at 425.82, which likely will correspond with the 50% area of this parallel channel. So far, we have not confirmed this breakout, so we'll see if we'll have price action pull right back down into this parallel in the near future with profit takers here on this fantastic 100% move. Next up, we've got Solana. Now, Solana has maintained strength even through the big dip that we did see in April. It's stronger than a lot of other altcoins, pushing up much higher than this, basically a pierce of the $100 area on the lows. Currently traded $50 higher than its most recent lows in April. So nice pattern here on the chart. But what also is developing, what I want to bring your attention to, is another potential inverse head and shoulders pattern. This neckline is defined by this diagonally sloping, a declining trend line right here. So this trend line currently is right around $160.91. Should the price action on Solana get up above this neckline, that would trigger a potential measured move up to the $200 area in the price point right there at $199.58. Be watching this pattern on Solana over the coming days and weeks. This could be a breakout candidate in the making. Next up, we've got QS. Speaking of breakouts, look at this chart here. This chart back in June, not that long ago, June 24th, it was trading at $4.33. Today, closed up here at $8.18. Nice 88% move in about a week and a half of trading. Fantastic to be in that stock. A lot of us members here also at Verified Investing, we're in it and we capitalize on a nice gain for a swing trade today. But I want to show you, give you some education as to what's going on. So we had this big breakout move and then a retest back down under this declining trend line strung out by pivot to pivot. But notice price action here on Wednesday, July 2nd. We moved back above this trend line. Then on the 3rd, we confirmed above that trend line. That meant any pullbacks to that trend line would be support. And look, right here, we had price pull back on this Monday, July 7th, just yesterday, pierced this trend line, and then today rocketed higher. So where is QS going? Next resistance, and you see it there at the top of my chart, is found by this declining trend line from the next major pivots on the chart. This resistance area is $8.52. So now that price is confirmed above this trend line, this diagonal sloping trend line right here from the pivots back in January of 25, in October of 24, price action, if it gets sold off and pulls back down, could be buying opportunities in this range for a reattack of this declining trend line right now, roughly $8.52. Be watching QS, this same play, everything that happened here will likely repeat itself if price breaks above this next declining trend line. So it's important to understand, recognize these sorts of patterns, how they break out, and capitalize on the movements and understand where price could go in the near to midterm on QS. Next up, we've got Soundhound. Now, this is what happens when you have a failed move. We've often talked about, bull flag patterns being bullish and bear flag patterns being bearish. But what happens when those patterns fail? Usually, it's a bigger move in the opposite direction. And right here on Soundhound illustrates just that. So we see here we had a head and shoulders pattern, being left shoulder, head, and then right shoulder on the chart of Soundhound. This diagonal inclining trend line right here was the neckline of that pattern. Notice when price closed on June 12th, it moved beneath that neckline. Then the following day on Friday the 13th in June, it confirmed under that neckline. That was telling me then that this pattern, this head and shoulders pattern, was likely going to bring price on Soundhound down to $6. But what happened right here on June 30th? We had a break above this neckline and then a confirming move on July 2nd. That all negated this head and shoulders pattern. And since then, the price has ripped higher, now tagged the next area of resistance, which in essence is the inclining trend line right here, roughly around 1357. It's important to recognize, even though we do have patterns that stack probabilities in our favor, these patterns do fail from time to time. And when they fail, it's important to get out of that play because you need to be looking to go the opposite direction. Whenever you have a failed move down, the next move going up is going to be big, much like displayed right here on the chart, a Soundhound. All right, guys, that wraps up Trading the Close. A lot of great charts and trading setups, plus good education to go along with it too. Thank you guys for joining me today. Look forward to being back tomorrow. Until then, have a great day.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.